Hello everyone, this is Professor Raghavendra Adhyapak, KLS Kokti College of Commerce, Belagavi. So in today's class, we are going to see with the last concept in this chapter, that is financial derivatives. Okay, so first we will understand what is the meaning of derivative. Okay, so the term derivative stands for a contract whose price is derived from or is dependent upon an underlying asset. Okay, so where the price is derived or depend on the any other underlying asset, then it is known as derivatives. Okay, underlying asset could be a financial asset such as currency, stock market index, or an interest bearing security or any other physical commodity. Okay, according to Securities Contract Regulation Act 1956, the term derivative includes a security derived from a debt instrument, share, loan, whether it is a secured loan or unsecured loan, risk instrument, or contract for a difference or any other form of securities. A contract which derives its value from the price or index of prices of underlying securities are known as derivatives. Okay, so now we will see what are the different types of derivatives contract. Okay, first one is forward contract. Okay, so these are the promises to deliver an asset at a predetermined date in a future date at a predetermined price. So what will happen here? The both parties will be come into the contract and they set the future date at which price they are going to contract or deliver the asset. For example, two parties will be there in the next month. Okay, they're going to exchange that asset for a particular price. Okay, for example, there is a one any other asset. Okay, so that asset will be traded in the future or it at a predetermined future date at a predetermined price. मतलब प्राइस भी और डेट भी दोनों क्या होता है फिक्स होता है. ओके, सो दे कम इनटू अ कॉन्ट्रैक्ट, दे फिक्स द future date at which they are going to exchange and the price also. So that is known as forward contract. Next is future contract. It is also a kind of forward only, but it is little bit standardized forward contract. We can say that it is traded on an organized exchange. Okay, so यहाँ क्या होता है organized exchange में सिर्फ future contracts होता है. Okay, so the future contract is an agreement between two parties to buy or sell an asset at a certain time in the future at a certain price. These are basically exchanged traded standardized contracts. The exchange standards guarantee to all the transaction and contemporary risk largely eliminated. Okay, so this is about the future contracts. Next is options. Okay, so what is options is contracts that give the holder to option to buy or sell specified quantity of underlying assets at a particular price on or before a specified time period. Okay, so what will this? Here the holder will have the right, okay, but not the obligation to buy or sell any underlying asset. यहाँ पे क्या होता है, होल्डर के लिए ऑप्शन होता है, वो बाय भी कर सकते हैं या नहीं भी कर सकते, ऐसा कंपलसरी नहीं है. इट इज लाइक जस्ट अ ऑप्शन. Okay, so with a particular price in the future, that person may buy or sell a asset or underlying asset for a specific price on or before the time period. Okay, so there will be purely option, it is not any obligation. So such kind of optional contracts are known as options. Okay, so the word option means the holder has right but not the obligation. Okay, next is basically there are two types of option. One is call option and another one is put option. So call option gives the buyer to right but not the obligation to buy the given quantity of underlying asset at a price or before the date by paying an a premium. Okay, so यहाँ पे क्या होता है, ऑप्शन क्या होता है, होल्डर के लिए कॉल ऑप्शन क्या कर सकते हैं, बायर बाय कर सकते हैं या नहीं भी कर सकते. यहाँ पे क्या है, प्योरली बाइंग इज ऑप्शनल फॉर अ होल्डर. ओके, सेकंड वन इज पुट, वेयर द buyer will have the right but not the obligation to sell the given quantity at a future date, future price के लिए, right? यहाँ पे क्या होता है, selling is purely optional, means he may sell, he may not be sell, but there is no any obligations. Okay, so when they have the choice or a right regarding the selling and buying, such options are available. So that options are known as call in case of buying option and put in case of selling option. Okay, next is participants in derivatives market. Okay, so we know that a derivatives market, so what are the different participants are involved in this derivatives market? Okay, so participants in the derivative market are the derivatives market similar to any other financial markets. So we already studied about the uh, other financial markets like primary market, secondary market, right? So there also we studied what are the different participants, right? So like that only here also some participants are involved in this market. So they are, first one is hedgers. They are the investors with a present or anticipated exposure to the underlying asset which is subject to the price risk. So hedgers use the derivatives market primarily for the price risk management of assets and portfolios. So first option is of hedgers. Second one is speculators. So these are the individual who take a view on the future direction of the market. They take a view whether prices would rise or fall in the future. Accordingly to that, they buy or sell the future and options and try to make a profit from the future prices movement of underlying asset. So स्पेक्युलेटर्स क्या होते हैं, फ्यूचर ओरिएंटेड होता है, राइट? सो व्हाट they study or assume and get the direction whether the prices of the shares are going to increase or decrease in the future. Okay, so according to that tendency they're going to come into a transaction whether to buy or a sell. अगर फ्यूचर में प्राइसेस राइज हो रहे हैं, अभी बाय करना है, फ्यूचर में सेल करना है. इन द फ्यूचर इफ द प्राइसेस आर गोइंग टू फॉल, देन व्हाट दे विल डू, they now sell it more and more because in the future price may goes down. So like that speculators are more future direction oriented. So according to that future tendencies they take the decisions. Arbitrageurs, they take the position in a financial market to earn the risk less profit. The arbitrageurs take a short and long positions in the same or different contracts at the same time to create a position which can generate a riskless profit. So basically riskless profit earn के लिए arbitrageurs क्या करता है, financial decisions लेता है. Okay, so these are the different participants in the derivatives market. So by which we are completed with this unit as well as we are completed with the syllabus of investment management.